G'day folks, Jim here from FX Charts, Monday the 16th of December. Thanks for tuning in. Friday's session was really more or less about position squaring ahead of Wednesday's FOMC meeting. There was some rather soft US PPI data released on Friday. That kind of reversed thoughts somewhat that the Fed may actually consider tapering on Wednesday. Don't think that's really likely. It's going to be the first quarter of next year. So the dollar was a little bit mixed. It made some mild gains against the European majors, but also it lost some ground against the yen. So if we go and look at the charts here, starting with the euro came off from its highs. This is a 4-hour chart. Got down to just above 137 support and it bounced a little bit to close at 137.40. Now the 4-hour charts are looking a little bit negative. The momentum is pointing towards slightly lower levels. But I really don't think we're going anywhere too far. If we look at the dailies, they're not really all that convincing. We might have made a bit of a double top up here around this 138 level, but that's yet to be confirmed. We might head down below 137. Go and have a look at the hourly charts, and we're heading into support here. Really above this 136.90 level. This is the first FIBO support. That may well hold it on the day. A break would see a deeper correction, but at this point I don't think it really looks likely, and the 38.2 is down at 136.15. Really overall I'm looking for some pretty choppy trade, and it may be that we're building a channel here and we're going to just hang around in that for the next 2 or 3 days before the FOMC, so I wouldn't look for too much directionally. Moving on to dollar yen, that made a new high. Took out the 137.73 level, got up to 136.91. This is a daily chart, 103.91 I should say, and has come back down to 103.20 where it's opening the week. Now the 4-hour charts, once again a little bit indecisive. As you can see from the indicators, we've got a little bit of bearish momentum on the 4-hour, a bearish divergence on the 4-hour charts, and I wouldn't be surprised to see a move back to this 103 support level. If that held, well, that wouldn't really surprise. If we go below there, then I think possibly we go down to this 102.40 area. But on the top side, 103.90 does look a little bit toppish to me at the moment. And I'd be doubtful getting a bunch above 104, at least until the FOMC. Now, if they do announce any tapering, we're going to take out this 104 level quite quickly. And I think we need to go out to the weeklies here. We're probably headed on towards a 105, where this 61.8, 105 and a quarter actually, where this 61.8% FIBO resistance lies. But I think that's a way off yet. Sterling, it's going to be a pretty busy week. We've got a fair bit of data out. We've got jobs data, we've got the GDP, we've got the Bank of England minutes. But sterling looks as though it's coming off its highs, 104.65. It hasn't really seen that since, and momentum is pointing lower. So I think we can potentially go down here to where this support lies at 162.30. And a break would take us back towards the sort of rising trend support, where 161.60 that is. That's some way off at the moment, and really it probably remains choppy with a kind of negative bias. Looking at the dailies, they look as though they're wanting to head a little bit lower as well. They're rounding off and pointing a bit lower. So I wouldn't be surprised to see it come back down here. There's going to be some decent support also at this sort of 162.60 level, so which is pretty much where we got down to on Friday. Now below there would take us back down to this trend support. So that's sterling. Dollar Swiss is kind of interesting. Looks as though on the 4-hour charts we've got a bit of positive momentum for the dollar, but there's good resistance here at this 89.35. I'm not sure we are ready to take that out yet, but if we go and have a look at the daily charts, it looks as though we could be in a channel here, and we're sitting on this good FIBO support, which is actually on the weekly charts below that. The weekly charts up. So as long as that holds, maybe we are sitting in this channel and can eventually head higher. But for the time being, we've got no real sign of a dollar turnaround. So I once again, before Wednesday, I think we're just going to chop around and not do too much, but maybe the 89.35 to sort of 88.50, 60 area will cover it. Aussie. Well, the Aussie has recovered from its lows. It's looking a little bit more positive, and having had eight weekly finishes lower, we're probably due for a bit of a correction. The MACDs, weekly MACDs, look as though they're running out of a bit of steam on the downside. So a push a little bit higher wouldn't surprise, but I do think we're probably overall in a longer term downtrend, and still looking for an eventual move to this 88.48, if not 87.80 low. On the top side, if we saw this sort of 90 cent level again, I'd look to be sort of selling it up there, but we could go as high as this first FIBO at 91 the figure without too much problem, and then the 91.67 area, which has been that's been a bit of a double top over the recent days. Don't think we're going much above there at this stage. Kiwi is just choppy, although I'm beginning to wonder if we are in a bit of a channel. It's not perfect. It did break lower than that a couple of weeks ago, but we have got this channel here. So we've got a top here at around 83.10. The base is at around 82 at the moment, but a break of that would take us a bit lower. We've got this 85 level down here, and down further on down. Well, that's a long way off at the moment, but it could be the way of it over a period of time. So I think with the Kiwi, it's probably best left alone. You sell it up at around 83, 83.30, and buy it back at 82 the figure. That's all I can suggest at the moment. Good support further out at 81.65 or 81.60, somewhere around there. So that's about it. I don't think we're going to be looking at too much in the next couple of days. It is going to be choppy, and I think a lot of people are probably squaring up, not only going into the FOMC meeting, but liquidity is going to thin out now as we head towards Christmas. So that's about it. Today, as I say, we've got the PMIs. In the States, we've got industrial production and capacity utilization. And first up will be the China HSBC flash manufacturing PMI, which could push the Aussie around a bit. But that's about it for today. So have a very good day's trading, and we'll talk to you tomorrow. Cheers.